Ooh. Okay, so this is November 22. So I actually took this question from an old paper. Yes. Okay, I'm not going to make the question bigger and then I have to make it smaller again for where I write. You've got the question paper in front of you. Okay? So if you can't read there because it's too small, use the one that's on your table. Okay, so it says Bigfoot are partners in a business called Bigfoot Shoe Stores. They have a markup of 80% on costs. This is important. Markup of 80%. And their debtors are given 32 days to pay their accounts. And they negotiated 45 days for their creditors. This is my credit terms. Okay? It's the credit terms I have with my debtors, but it's also the credit terms I have with my creditors. So, next one. Using the above information, do the following. Calculate the percentage gross profit on cost of sales. So, gross profit on cost of sales is the gross profit on top and the cost of sales at the bottom. You don't even have to write this down because you're not going to get marks for writing the formula. Okay, but now let's go look. What information do they give me? They give me sales and cost of sales. Can you see they don't give me the gross profit? But if you go back in your head into the income statement, how do you calculate gross profit? Sales less cost of sales. So you're going to take your sales, which is 3 million. You're going to subtract your cost of sales, which is 1.8. And you're going to divide it by your cost of sales, which is 1.8. Now, times 100. This is very important to write down. Because in the matric exam, you don't have to say it's a percentage. You can just write the answer. But you have to show times 100 to get your principal mark there. Okay. Now, since this isn't maths, I'm not going to waste my time by writing the next step as 1.2 over 1.8. You don't have to do it. What I do is I just quickly write here the difference is 1.2. You see? And then you go calculate 1.2 divided 1.8 times 100, and that gives me what? It's 66.67. It's 66.66 repeating, or you can round it off to 66.67. Two decimal places. When they don't tell you anything about decimals, you always go to 2 decimals. Okay. Then, next. Should the owners be happy with the markup? Now, what are you going to do? When they ask this, you're going to compare it with the markup that they told you about right there at the start. And what did they say? What's my markup? 80%. Now, they say, quote figures to support your answer. You're going to say, no, you shouldn't be happy. The 66.66% markup achieved is lower than the 80%. That's all you need to write. Now, let's quickly go through it again. This is the official markup of the business. This is what they really got on average. Okay. And what did we say again? Why would the real one be lower than the actual one? Discounts. It's always about discounts. And what kind of discounts do we get? You get trade discount. You can also get sales, but you can't say just sales because that's confusing because of the word sales, which means my sales. So you won't say sales. You'll say end of year or clearance sales or end of season sales or end of stock range sales. Have you seen those ones? They're always everywhere. Just to indicate that we are talking about a sale that the shop have where they mark down the goods. Okay, which is discount. Okay. So number 3. Calculate the average debtors collection in days. Comment on your answer using figures to support it. Okay, so now calculate average debtors collection. So average debtors, ne? And what's that one? It's going to be the opening and the closing. Right. Over credit sales, not total sales, times days. Okay. And we're not going to worry here about leap years and crawl years and jumping years. It's always 365. Okay. Now if I go look, can you see that half is average? Average opening debtors plus closing debtors. Another way to write it is you can say opening debtors plus closing debtors divided by 2 over credit sales. Both exactly the same thing. Okay, but whichever one makes sense to you. So I'm going to say half. Now let's go look. Do they give me debtors? Yes, there's my debtors. 280 plus 240. 280 plus 240 over, what is credit sales? They tell me sales, 50% is on credit, so that would be 1.5 million. Okay. And can I tell you, can you see here? It counts 6 marks because they mark it like this. 1 point for that half or the divided 2. 2, 3, 4, 5, answer 6. Can you get a lot of marks here? Of course you can. Okay, so now let's see. The easiest way for me, how I see, is that I'm just quickly going to calculate the top. So 280 plus 240 is going to give me 520. And 520 divided by 2 is going to give me 260. And 260 over 1.5. 1, 2, 3, 365 gives me how many days?
63 days.
No commas.
There is commas, comma 26.
2,26. So it's going to stay 63 or 64 days. They'll take both as right. So can you see? The debtors take more than 2 months to pay. Is that our credit terms? What was our credit term?
1 month.
32 days. 32 days. So they are taking a month longer. Okay, so let's see. They say, comment on your answer, right, to support whatever you think. So you're going to say, debtors takes too long to pay. Credit term is 32 days. Okay, now you can most now see they take 63, but they're supposed to take 32. Huh?
That's great.
Come again? No. With who did you negotiate? With the creditors. Okay. So now, can you see how bad this is for my cash flow? If I pay my creditors in 45 days, but my debtors take 63 days to pay, can you see now I'm using cash that I actually should use for running my business, for paying water and electricity, paying rent. I'm using that cash now to pay my creditors because my debtors don't pay on time. I always want to pay my creditors with the money the debtors pay me. Okay, so now if this is 6 marks, they would mark it like this. They would make this 2, 3, 4, 5, 6. See, there's different ways to mark. Number 4. Is everybody with me? Sorry for that. Let's see. Number 4. Name 2 control measures that should be used before allowing customers to buy on credit. Now this is your screening. So what are you going to do? You're going to ask for their South African ID, to see that they are South Africans. You're not selling on credit to a Norwegian. How are you going to get the money once you go back home? Okay? Proof of address. So yeah, because people might have a South African ID but they stay overseas. Okay? You want a salary or a wage slip to see that he's earning every month. You want 3 months bank statements. Why 3 months? And why a bank statement? You want to see that that salary is deposited into this guy's bank account. Okay? And it's easy for you to make up a salary slip and pay that money in 1 month. But you know, it takes quite an effort to do it for 3 months. Okay? The other reason they do the bank statement is they want to check the debit orders and the stop orders if they go through. Because if someone has got a debit order but he doesn't have money, it's going to jump back. You see? So you want to see that his debit orders go through. He's got enough money. He plans good. He pays good. Okay. So there's 4 marks. 2 marks each. Like an easy 4 marks there. Is everybody still sharp? Question 5. Question 5. Come alive. Yes. Is someone still busy with this paper? Okay. Just give to Latodo when you're done. Question 5. Name 2 other liquidity ratios. So which liquidity ratios did we use? We only use average debtors collection. So you can literally now go say the current ratio, the asset test ratio, the creditors payment, the stock on hand, and the stock turnover. Okay. Calculate the return earned by Foot on his average equity invested. Now let's quickly look. We want the earnings. What is the earnings again? It's his salary, his bonus, his interest on capital, and the final distribution of profit. We also want his equity. What is his equity? His equity is the capital that he gave and the current that he has at this stage. Remember, the current account shows the part of the profit that went to him and he didn't use. It could also be that he used more than what he earned. Then it would be negative, né? Then you're going to subtract it from the capital. So let's quickly go look. So I'm going to do one big line times 100. And on the top I'm going to put the earnings, right? So now let's go look. We are working with foot, né? Now can you see here? They have done it for me already. So my life is good because they've already done salary, capital, final. Obviously in this case he didn't get a bonus. So can you see he already, that 300 is his earnings. Can you see that? So I can just take the 300. I actually didn't even have to have a long line like that. If they didn't give me the 300, I would have shown the 90 plus 30 plus 180. Right. At the bottom now, I want half. And this is actually nice. It's going to be half C plus C plus C plus C. C capital plus C current plus C capital plus C current. Opening, closing. Okay, so now let's go have a look. Here they give me current accounts. I don't want that. I want, yes, I actually do. I want the opening capital and the closing capital. I want the, but can you now see here, I want the opening current and the closing current. C plus C plus C plus C divided by 2. Okay, because I want an average. So now let's go write it down. I want half. 600 plus 500 plus 18 plus 153. Can you see? C plus C plus C plus C. And now if I go look, what is the total there? This is one. This is a big calculation. Come. Anybody with an answer there? So?
The total is 6355.
Okay, let her first ask. Yeah. Okay, let's. Okay, so I stopped doing that now. So I'm just saying here, please write this comment. They didn't ask for it, but you write that comment if they ask you if the guy should be happy.
Ma'am, why are you using this formula and not this formula?
No, they're the same. They exactly. So I did use. Give me. So what Mateo is asking me is why am I using this one and not this one? I am using this one because the earnings, if you look here, I only took foot, ne? The 300. If I did this one, I want the whole net profit. So I would have used then the 450. I would have added those two. Okay. And if you look at the bottom, this is his equity, meaning it was average of his capital and his current. Here, it would have been the total of all the partners. So I then would have had actually 1, 2, 3, 4, 5, 6, 7, 8. You see, it would have been more. Okay. So now they say, number 7. The partners are considering taking out a loan. As soon as you see the word loan, what is the ratio you're going to use? Debt equity. Debt equity. Right? So in other words, immediately you are now focusing on debt equity. So they can either ask you to calculate it or they can ask you to comment on it. So now let's look. They say, advise them as to whether they are likely to be granted a loan by the bank. Remember, we want less than 0.5 to 1. Eh? Calculate a relevant indicator to support your answer. So my debt is my loan. Now, can you see here they don't use the word loan, but they do use the word non-current liability, which is most your loan. And you're going to take the new one, the 520. So on this side you're going to say 520. On this side you want the equity. So again it's going to be capital plus current plus current. But it's going to be of partner 1 and partner 2 and partner 1 and partner 2. It's not going to be an average. Okay? So if I look here, I can see the closing balance is 500 and 500 for the capital. So it's 500 and 500 for the capital. And if I go look at the closing for the current, it's 15 and 153. So this will be 520 to 1,000,000.
10,300.
Huh?
10,300.
So does that 10 that you're reading include this one?
It's 10,300.
Like that?
Yes, ma'am.
Okay. Now, what do I know when I do a ratio like this? I know my answer will be something to 1. Always remember 1 is on your right side. So, let's read. This thing here looks a lot like a dividing. So you say 520 divided 1030 and it's going to give me 0.5. Okay, let's make it 5. Now it's right where it's in the middle, right? So now if I go look, did they give me a current ratio, debt to equity ratio from last year? No, they didn't. Ne? So this total is wrong, so it's not 0.5, thank goodness. What is this? Okay, so now it's going to be 0.121. Why do I say thank goodness? Because you can't comment on 0.5 if you don't have the previous year. Ne? Because you need to know, is it going high geared or is it going low geared? All the others, you can say this is high geared or this is low geared. But 0.5 you need to see where it's moving. So what is it? 0.45. So the business is low geared, low risk, meaning they will get the loan.